The last time we started with an important point to discuss, which is what is the best method to be used in order to allocate the joint costs. Of course, we said that we have more than one category to allocate our joint costs. We said that we have the first category, which is a market-based category, which uses market-based data in order to allocate the joint costs. While as, on the other hand, we have another category which uses a physical attributes or the physical attributes of the products in order to allocate the joint costs. And now we need to discuss what would be the best method to be used in order to allocate the joint costs. Is it the market-based categories, or is it the physical attributes category? Is it the sales value method at the split off point, of course? Is it the Nrv method, or is it the constant gross margin percentage Nrv method? So what do you think? Of course, we started our discussion by stating that the market-based is better than the physical measure methods. Why? Because we said in order to allocate costs, we either use a cause and effect relationship between the allocation base and the cost, or we could use the benefits received relation between the allocation base and the cost itself. And of course, the better method or the better category that recognizes the benefits received is the market-based, because as we said, the market-based considers the selling value or the sales value of these products. Therefore, it considers the benefits that are received from these different products and uses this amount or this market-based data in order to allocate the joint cost. Therefore, the better method or the better category is the market-based in comparison with the physical attribute or the physical measures category. Why? As we said, it considers the benefits received. And of course, from the market-based category, the best method to be used is the sales value at the split off point. Why? Because it is the best method, or it is the best method that recognizes the benefits received. Of course, all the market-based data category, or the market-based category of allocation of the method of joint costs considers the benefits received. All of them, whether they are the constant gross margin, whether it is the Nrv method, whether it is the sales value at the split off point method, all considers the benefits received, all considers the sales value, all considers the market-based data. But the best method that considers the benefits received is the sales value at the split off point. Why? Because it considers the realizable value, or considers the sales value immediately after the split off point. Which means if we consider this market-based data, when we consider the sales value after the split off point, we are considering the benefits received immediately after the split off point, which means we are considering the benefits received because of the joint cost or because of the joint process. Therefore, the best method that considers the benefits received is the sales value at the split off point. Of course, there are other reasons that the sales value is better than the other market-based methods. It is more simple. Using the sales value at the split off point is more simple than using the Nrv method. Of course, the Nrv method needs from us to know what would be the separable costs, what would be the processes, what would be the decisions after the split off point. Because as we all said or we all saw in our NRV method, we need to know the separable costs, we need to know the sales value in order to calculate the net realizable value after incurring the separable costs, correct? Therefore, we could not achieve or we could not use this method unless we have this data at hand. Therefore, the sales value at the split of point method would be much easier to use than the NRV method, would be much easier to use than even the constant gross margin method. Therefore, the sales value method is the best method that considers the benefits received. Of course, all the market-based category considers or recognizes the benefits received criterion, but the best method that recognizes this criterion is the sales value at the split of point. The sales value at the split of point, as we said, is much easier to use than the NRV, is much easier to use than the constant gross margin. And as we said, we do not need to know any further information because the sales value at the split of point amount or the sales value directly at the split of point without considering any more additional or any additional information, whether it is what is the separable cost, what is the sales value after these separable costs, whether we need to have further processing or not. This type of information would not be considered in the sales value at the split of point method. Therefore, if we have or if we could achieve or attain information about the sales value of the different products directly after the split of point, the best method to be used is the sales value method, of course, at the split of point. But what if we could not attain or we could not achieve the sales value of the products immediately after the split of point? Which means if we have product A and product B, and according to our discussion right now, the best method to use is the sales value at the split of point. But the problem would be sometimes that we could not achieve or attain the amount of sales value of product A and product B or one of these products. Therefore, the question here comes, would we be able to allocate the joint costs using the sales value at the split of point? Of course we cannot, because we do not have enough information in order to use this method. Therefore, in this case, we would use the NRV method, which is the second best method after the sales value at the split of point. Why? Because as we said, the NRV considers the benefits received criterion, because it is a market-based or it is a method within the market-based category. And of course, the NRV method approximates the sales value after the split of point. How do we achieve this? By deducting the separable costs from the saleable value after further processing. Therefore, if we have, for instance, a saleable value by the amount of 400,000 and separable cost by the amount of 200,000, therefore, the net realizable value of this product would be $200,000, correct? And the $200,000 approximates the sales value at or after or immediately after the split of point. Therefore, it considers or it tries to approximate this value after the split of point. Of course, the problem in the NRV method is that it considers that the markup, or the 200,000 as we said, is attributable as a whole amount to the joint process, not to the separable cost or the further processing. Because as we are saying that the 200,000 is used to allocate the joint cost, correct? Therefore, we assume that the 200,000 was attained or achieved because of the joint process, not because of any of the processes that was after the joint process, which we call further processing. This is the problem with Nrv. But this is a method to be used only if the sales value method was not being able to be used because of the lack of information. Of course, on the other hand, we have the last method, which is the constant gross margin method. The constant gross margin method makes an assumption. It assumes that all products within or that were achieved because of the joint process have the same gross margin. And it considers the joint process of different products as, or it considers these costs to be the cost of only one product in order to calculate the constant gross margin, and then assumes that this gross margin would be the same for all of the products after the split off point. Of course, this assumption is not correct, because as we know from our activity-based costing chapter, that this is a broad averaging method, correct? This means that we assume that the first product would be the same as the second, would be the same as the third, would be the same as the fifth, would be the same as the 10th, and so on, which is, in real life, is not correct, or is not, let us say, a correct assumption to have. But this is a method if, for instance, we need to consider, or if this is the method to be used, if actually all of the products that are being produced have indeed the same constant or the same gross margin, the same gross margin percentage as the other products. Therefore, as we can see here, this method assumes something that is incorrect. Therefore, it should not be used unless, of course, the assumption here is correct, which is all products that are produced within the joint process or within the joint manufacturing process yields indeed the same gross margin percentage. On the other hand, these are the market-based data, or the market-based data category. On the other hand, we have the physical measure. Of course, the physical measure does not consider or does not relate the allocation base to the benefits received, as we just said. That's why the physical measure is not to be used unless we do not have the ability to use the market-based or the market-based data. When do you think is the case that we cannot use the market-based data in order to allocate our joint costs? What do you think? Have you heard before about something called regulating price? Yes. Of course, some of the governments, they regulate prices according to a specific price. Therefore, for instance, I have product A and product B. For us, we need to price this product according to the cost, according to our manufacturing processes, and so on, as we took in Cost Accounting 1. But sometimes, because this product is vital within some countries and so on, the government itself would set the price of this product. Like medicine, excellent. Like, for instance, wheat. Like, for instance, bread in some of the countries, and so on. Therefore, in this case, we could not use the market-based data, because we said the market-based data, we use it, and it is the best category to be used because it considers the benefits received criterion, correct? But if the prices are regulated from the government, therefore, the benefits received here would not be considered, because these prices are not considered or are not related to the benefits that are received from this product. Why? Because these prices are set by the government itself. Therefore, in this case, we would use the physical measure method. We would allocate the joint costs using physical attributes like kilograms, like for instance weight, for instance size, for instance the number of the product, and so on. Of course, the problem of using the physical measure is that the physical attribute in all of the products should be the same. This means if we have two main products, for instance, or two joint products, product A and product B, and we need to allocate the joint cost on product A and product B, this means that product A should have the same physical attribute as product B. We cannot allocate joint costs if product A, for instance, have a physical attribute of kilograms, and the second product or product B has a physical attribute of liters, for instance. In this case, the physical attributes are not the same. Therefore, in this case, we could not use the physical measure method. Of course, sometimes we could change the liters, for instance, to kilograms, or the kilograms to liters, in order to have this common physical attribute in order to allocate the joint cost. But if we could not come up with this common physical attribute, we could not use the physical measure allocation method. Any questions? Therefore, as we can see here, each method has its advantages and disadvantages, but of course, the best method, as we said, to be used is the sales value after the split off point. But sometimes we could not use this method, therefore we need to use the other methods, and of course each method has its advantages and has its disadvantages, sorry. Any questions? Now let us consider our last point for this chapter. Of course, until now, we considered that we only, in our joint process, that we only have main products or joint products, correct? And we did not consider what would be the method, or what is the method going to be like if we have a byproduct. And of course, a byproduct is a low sales value product, while as the main product or the joint products as we define them are high or has a high sales value product. Therefore, now let us consider a joint process that yields two products, one with a high value and one with a low value. This means that we would have a main product and a byproduct. Of course, we are going to use two different methods in order to recognize the byproduct. The first is the production method. The second is the sales method. Of course, the production method recognizes the byproduct when the byproduct is produced, or in the accounting period the byproduct is produced. Therefore, the recognition here would be the same as any other product when this product is produced. While on the other hand, the sales method would not recognize the byproduct when this byproduct is produced, but would recognize this byproduct when it is sold. Therefore, here is the difference between the production and the sales method. The production method would recognize the byproduct after production or immediately after production, while as the sales method would not recognize the byproduct after production, but would recognize it when it is sold. Therefore, let us consider an example in order to see how these two methods could be achieved, or how these two methods could be used in order to allocate the joint cost if we have a byproduct. Let us consider here example number 3. The Westlake Corporation processes timber into fine-grade lumber and wood chips that are used as mulch in gardens and lawns. Information about these products is as follows. Fine-grade lumber, which is the main product, sells for $6 per board foot. Wood chips, which is the byproduct, sells for $1 per cubic foot. Data for July 2012 are as follows. As we can see here, we do not have any beginning inventory. The production for our main product is 50,000. The sales is 40,000. And of course, the ending inventory would be 10,000. And for our byproduct, the production or the beginning inventory is 0. The production is 4,000. The sales is 1,200. And the ending inventory is 2,800. Of course, this is according to the board foot and the cubic foot. These are not amounts. These are physical attributes of the main product and the byproduct. Now let us consider first of all the production method, and then let us consider the sales method. Of course, this is an illustration overview. As we can see here, the joint cost is $250,000, which consists of two things: direct materials and conversion cost. Direct materials is by the amount of $150,000, while as the conversion cost is by the amount of $100,000. Of course, adding these two up would give us the $250,000 as joint costs. Of course, after the split of point, as we can see here, we have the fine grade lumber and the wood chips. The first is 50,000 board feet, and the second is 4,000 cubic feet. Now let us consider the production method. Of course, as we all know, and as we just said, that we are going to recognize the byproduct when it is produced. Therefore, if we need to recognize, or if we need to journalize the flow of costs of the joint costs and then the recognition of the products, first of all we need to recognize the costs. We need to recognize the conversion cost by the amount of $100,000, and then we need to recognize the direct material cost by the amount of $150,000. Of course, if these are production costs, therefore the work in process would be debited by these amounts, correct? Therefore, as we can see here in our journal entry number 1 and journal entry number 2, of course these journal entries is the same as the journal entries that we took in Cost Accounting 1, and as we took in chapter number 7 and chapter number 8. Therefore, work in process would be debited by the amount of $150,000, and accounts payable would be credited by the amount of $150,000. Of course, this journal entry summarizes two journal entries. Of course, the purchase of the journal entry and then the use of the journal entry. Here, the purchase and the use of the direct materials is combined into one entry. So do not be confused by this journal entry. Of course, as we can see here, we debited work in process by the cost of direct materials, which is $150,000, which is a part of the joint cost of $250,000. The second journal entry is to recognize the conversion costs. Of course, the conversion cost is by the amount of $100,000. Of course, we also would debit the work in process by this amount. Therefore, as we can see here, work in process is debited by the amount of $100,000, and of course various accounts, because here when we consider the conversion cost, we are considering the direct labor and the manufacturing overhead. Of course, the direct labor would be considered by the wages payable or the salaries payable and so on. but the manufacturing overhead would be credited by different accounts, like the accumulated depreciation, like salaries payable, like wages payable, like accounts payable, and so on. Because we do not have the details, we would credit various accounts, but if we have the details, we need to detail our journal entry. Number 3 now, of course, after the joint process has ended, we would have 2 products, because according to the production method, we would recognize the byproduct as a product after the production. Therefore, now, after finishing the joint process, or the joint manufacturing process, now we need to recognize 2 different products. The main product, which is the fine lumber, and the byproduct, which is the wood chips. Therefore, as we can see here, the work in process would be credited, and the finished goods inventory would be debited. Of course, the finished goods inventory is for 2 different products, therefore we would have 2 different accounts. Therefore, the byproduct inventory would be debited by the amount of $4,000. What is this amount? Is this the amount of the costs? What do you think? Of course, as we can see here, according to our example, wood chips, which is the byproduct, sells for $1 per cubic foot. And according to our joint process, we produced 4,000 cubic feet. Therefore, the amount of the 4,000 is not the amount of the cost. It is not the allocated amount of the joint costs, but it is the realizable value or the saleable value of the byproduct. Therefore, we will recognize the byproduct not by the cost, but we are going to recognize the byproduct by its saleable value or the realizable value.
If you would sell it for $2, it would be $8,000.
It would be 8,000, excellent. This is an important point to consider. The byproducts are recognized using their realizable values, not using the cost. Of course, we all know that the finished goods inventory should be recognized by the cost. This is what we took in Cost Accounting 1, and this is the right method to be used. But here, because the byproduct has a small value in relation to the value of the cost, and because the byproduct is not the main reason of incurring the joint costs, therefore we would recognize the realizable value of this byproduct as a decrease in our joint costs. Therefore, the amount of $4,000, which is the saleable value of the byproduct, is considered as a decrease in the amount of $250,000, which is the joint costs. Why? Because we, as an organization, do not incur $250,000. We do not have a manufacturing process in order to achieve a byproduct with only an amount of $4,000 or with an amount of a saleable value of $4,000. Therefore, this $4,000 is considered as a decrease in our joint costs. As we can see here, the byproduct is debited by the amount of 4,000, which is the realizable value. And of course, the finished goods, which is the fine-grained lumber, is debited by the amount of 246. From where is this amount? It is the joint costs minus the realizable value of the byproduct. As we said, the byproduct or the saleable value of the byproduct or the net realizable value of the byproduct would decrease or is considered a reduction in the joint cost. Therefore, as we can see here, the finished goods would only be debited by, for the main product, would only be debited by the amount of the joint costs reduced by the saleable value of our byproduct. Any questions? Now let us consider the selling of the byproduct and the main product. Of course, the main product, of course, here we are using a perpetual system. Here we are using a perpetual system. Of course, using a perpetual system, we would have two different journal entries. The first to recognize the cost of goods sold, and the second to recognize the sales value or the revenue. Therefore, the first recognized that we have sold, of course, 40,000 from 50,000. Therefore, with the cost of goods sold by the amount of 196,800. And the second would recognize the amount or the saleable value or the realizable value of this sales, which is $6 multiplied by the 40,000, which is $240,000. Of course, this is normal as we took in accounting principles 1 and 2, and as we took in cost accounting 1. And now let us see how we are going to recognize the sale of the byproduct. Of course, when we recognize the inventory or the finished goods inventory of the byproduct using the net realizable value, therefore, when we are going to sell this amount or this product, we are going to recognize the revenue the same as the cost, correct? Therefore, in this case, we would not recognize any revenues, we would not recognize any profits, we only would recognize the decrease in the inventory itself. Therefore, the selling of the byproduct in the production method would be recognized as a decrease in the finished goods inventory. It would not be recognized as a revenue. Because if we recognize it here as a revenue, we would have duplication here. Because we decrease the joint cost by the amount of 4,000, and then if we would recognize a revenue, therefore here we would have duplication. Therefore, in the production method, when we sell the byproduct, we will recognize the selling of the byproduct as a decrease in the ending or in the finished goods inventory of the byproduct. Any questions? Now let us consider the sales method. Of course, the first and the second would be the same. The first entry and the second entry would be the same. Why? Because the sales method and the production method would not by any means have an effect on how we are going to recognize our cost. Therefore, we would recognize the first, which is the direct materials cost, as a debit to the work in process and a credit to the accounts payable. And as we said, this is a summary, or this entry is a summary of two different entries. As well as we are going to consider the cost of the conversion cost. We would debit the work in process and credit the various accounts. Now, here comes the difference between the sales method and the production method. In the production method, we recognize the byproduct after or immediately after production. Here, in the sales method, we would not recognize anything, or we would not recognize the byproduct at all. We will only recognize the main product. And as we can see here from our entry, the finished goods fine grade lumber is debited and the work in process is credited. As we can see here, did we recognize the byproduct? Not whatsoever. And the joint costs and the whole amount of the joint costs were allocated to the main product. Not as the first method, which is the production method, where the only amount, or the remaining amount after the deduction of the saleable value or the net realizable value of the byproduct was allocated to the main product. But here, all the joint costs would be allocated to the main product. Of course, after selling the fine grade number, we would recognize the same entries. Of course, the first entry to recognize the cost of goods sold, the second entry would be to recognize the revenue amount. Of course, the amounts here is different. What are the amounts here is different? As we can see here, we have 200,000 and 240, while as in the production method, we had 196,800 and 240. So why is the cost of goods sold number is different in the two methods? Excellent. Therefore, in the sales method, we recognize the whole amount of the joint cost as the cost of the main product, correct? While as in the production method, we only recognize a portion of the joint costs after deducting the saleable value or the net realizable value of the byproduct. Therefore, here, the finished goods inventory was different between the two. Therefore, the cost of goods sold would be different between the two. Of course, at last, the recognition of the selling of the byproduct here would be by recognizing a sale, by recognizing a revenue. Not as the production method where we recognize a decrease in our inventory. Here we would recognize a sales, or we would recognize the selling of the byproduct as sales or as sales revenue. Why? Because we did not consider the saleable value as a reduction in the cost. And we did not consider this amount in any other means. Therefore, we need to consider this amount when we sell this byproduct as a sales revenue. Of course, as we can see here, this is the only recognition to the byproduct. We only recognize the byproduct when it is sold. While as in the production method, we recognize the byproduct or the whole byproduct that was produced by its net realizable value as a finished goods inventory. Any questions? This is the difference between the two. Yes.
How do we deduce the saleable value? And number 5 here, we deduce the
No, this is the saleable value. The 1,200 is... No. 1,200 is the cubic foot sold, and it is sold by $1 per cubic foot. Therefore, 1,200.
And it would be
if $2, if the saleable value is $2, it would be 2,400. Therefore, this is the saleable value, but only for the amount that was sold, not for the whole amount that was produced. Any questions? By this, we have come to an end to our chapter number 16. Inshallah, the next time we are going to continue with solving the problems of chapter number 16. Thank you for listening, and I'll see you the next time, inshallah.